Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy, and today we have a new guest to the show, and her name is Nicole Adshead-Bell. For those of you that don't know Nikki, she is a director of Cupel Advisory Corp. Nikki is a geologist with over 24 years of capital markets and minerals sector experience. Her career includes CEO of a gold mining company, long-short fund research management, investment banking, sell-side equity research, specialist geology consulting, and geology research. Her diverse background in capital markets, the minerals industry, and as a mining executive and independent director has provided insight into the common traits of successful and unsuccessful companies of all sizes. Nikki has an extensive global network with company management teams, boards, professionals, sell and buy side, and has built a reputation for having a broad understanding of how the dynamic mining sector functions at all points in the cycle. So Nikki, without further ado, welcome to Living Your Greatness.
Thank you very much, Ben, for having me. Lovely to meet you. Hopefully it's in person one day.
Absolutely. So Nikki, let's kind of get rolling here. Tell us a little bit about yourself. Where did you spend your formative years growing up, and what inspired you to become a geologist?
Well, probably you can tell from the accent, Australian, grew up in Northeast Queensland, and which I never appreciated until I left. It wasn't until I moved to Canada that I understood the concept of a sun holiday. So I grew up in the dry tropics, I suppose you would call. So, and how did I become a geo? Well, my dad was a geologist, and he tried to force all of his children to become geologists, and he was successful with 2 out of 3. So it was a bit of nurture happening, forceful nurture. But he's an academic, and myself and my brother became geos. And my sister, who's in the middle, she became a cultural anthropologist. So she was the one that stepped outside the fold.
Awesome. Well, thanks for giving that background. It's interesting to hear. I didn't realize that the blood runs in the family here, the geo blood. So Nikki, I just want to move to kind of like the next question here is, you started as a geologist and then eventually you turned into an investment advisor. So you kind of went from being like the company builder and now going to the other side where you're like the capital builder. I think it was 3 or 4 years ago, you founded Cupel Advisory Corp, to focus on mining sector investments and provide a strategic advisory, due diligence, and research services to institutional funds and mining companies. So something that I'm thinking about is what sparked your fire to transition over to the capital side?
What sparked my fire was actually a negative event. I finished a PhD in early 2000, and those that are my age that are in the mining sector, remember that was an absolutely terrible time in the business. And so I'd spent all this time at university and I stepped out thinking that I was going to be really employable. And now industry is very cyclical. And when you're in a downturn, obviously jobs become very scarce. And so I entered this time where it just felt like there was never going to be an opportunity for a geologist, particularly one that was a little overeducated like myself. And so I started looking about alternative careers. And my one criticism probably of most technical degrees is you're not taught about the business side of the business and how that ultimately money flow is what drives our sector. And it's a capital intensive sector. So there's this constant supply of money. So we moved to Canada in 2001 because my husband was transferred. He's a geologist too, talk about keeping it in the family. And I suppose I started looking at alternative careers and came across this thing called investment banking, did research on it, same with the fund side. And then I ended up working for a junior for 2 years in the early stages of first moving to Canada, and then had my first job on what you'd call the financial side. And I didn't realize at the time how unusual it was to segue immediately from being technical to working for an investment fund. And it was just through a happy set of circumstances that I came across a precious metals fund that was looking for a younger geologist to join the team. And my boss said, who was an accountant, said, look, I can teach you the financial side, but I can't teach the technical side. So we want someone with your skill sets to come in. And so that was really my segue into the financial side of the business. And it was an incredible learning experience. So for the next 2 years, I was really paid in some ways to educate myself about the business. So the fund that I worked for does a lot of technical, detailed, tie-kicking due diligence. So I got to travel the world, got to go and see projects from exploration to development to mining, meet management teams, meet directors. And so I had this incredible entree that I suppose few people have, particularly when you're younger and you haven't come up through the financial stream. And so I had the technical side and then rounded that off with the financial side. And then that was at the beginning of the bull market in all commodities, largely driven by China. And so then I went from working for investing in precious metals for a fund, and then to the sell side where I worked as an analyst covering copper, uranium. It was at the beginning of the bull market in uranium, zinc, base metals. And then there was very obviously a bubble in the uranium sector at the end of 2007. And I didn't want to be covering a sector when it crashed, because in my experience, if you got something right, then investors thought it was their idea. And if you got something wrong, it became your idea. So when a whole sector fails or collapses, there's nothing that you can do. Everything goes down. And so then I became an investment banker for 4 years, and that was really focused on M&A, so advising companies on acquiring other assets or divesting their own assets or combining with other companies. And then decided I was too honest to be an investment banker for the rest of my life. And I say that with the greatest respect to investment bankers. So then went back to the buy side, back to the fund that I was working at, and really, I suppose, it developed kind of a 360-degree perspective of the industry by that stage. So I think I was better at the investing side because I'd seen the other aspects of the capital markets, did that for a number of years. And then in 2015, Cupel, which is my company, it's me. And so left the fund on very good terms. I still speak to my ex-boss pretty often as we discuss elements of the sector. And started actively investing for myself, and then advisory work on the side. And so by advisory work, it might be helping a lending fund that's looking to finance a big project. So advising them on due diligence and how to manage that due diligence process. You know, what are the big risks that you need to look out for? And I also started, it was at a time when everyone decided that they wanted to put a woman on the board. So suddenly my gender, I was never known as a woman in mining industry. I was just a professional in the mining industry. And suddenly I became a woman in capital letters and quotation marks. And so started to sit on a few boards, which was an incredible experience, actually, to round out the corporate side and just understand how companies are managing their business at a very high strategic level. And I sat on the board of one company that ended up, the CEO wanted to depart that role. And so I ended up stepping from being a non-executive director to running a company that had a large open pit gold mine in Brazil. And so that was how I suppose I ended up being an accidental CEO. And it was the hardest thing I've ever done in my life, but it was also an amazing experience because we were on the verge of insolvency. We were really struggling financially speaking, a lot of debt on the balance sheet. And what we did was really fix the asset. And that was due to this incredible Brazilian team, whom I'm still very close to today. In fact, I just had the former country manager, we speak at least once a week. He was trying to catch up. And so got this experience of really trying to fix a company that had a lot of issues that weren't my issues, that I didn't create, but as a director, the ultimate buck stops with you. And so I did that, and then spent a couple of years actually trying to do something in Brazil again, acquire an asset from a mid-tier gold mining company, which I started doing that in 2019. And I got gazumped at the last minute by a competitor, having built a team and spent a lot of money doing due diligence. And then, but fortunately for me, I'm back involved in something with Brazil that's still private, but as a director. And so I suppose I have this unusually diverse set of experiences, jack of all trade, a master of none. So that's it in a nutshell.
Awesome, Nikki. Yeah, thanks for sharing that background. Something that I was amazed about, when I first discovered your work is seeing how you see all different sides within this industry of natural resources. And I think that's important because there could be a lot of biases as an investor or even as a CEO or whatever player you are, there could be a lot of biases. And so that was actually one reason why I wanted to bring you on was, first off, you have the geology background, which there's a lot of people, that don't know how to read, drill results and all that stuff, which we're not going to go into really detail today too much, but again, I'll say it. What I was really attracted to is the fact that you have all these different perspectives and angles, and you found a way to integrate them together to create, I guess you could say, a system or a formula or a standard amount of rules to make you a very successful not only advisor but also investor yourself.
Mm-hmm.
So something that I do want to ask though is, how is your background in geology given you a technical advantage as a strategic investor?
Yeah, so just stepping back, I think sometimes technical people struggle in our business because you spend all this time at university, and as you're probably aware and your listeners are aware, that mining is a very technical business. It's a language that you have to learn, and a lot of a degree is learning the language. Where technical people struggle is that when you're investing in the sector, you're competing against everybody else. And so 99.9% of the investing community is not technical. And so sometimes technical people, you look at it for the reality, the truth, and the reality ultimately comes out, but it can take years and years. And so there's sometimes a fundamental disconnect between how a geologist looks at an asset and how the sector looks at an asset, because a geologist is going, I don't think this is real, it's never going to work. But there might be great marketing, there might be some really good splashy drill results, and that's what entices the market. So there's a fundamental disconnect. So I think geologists have to step back and understand that at the end of the day, it's not even necessarily the project that drives value, it's the execution of the business strategy around that project. And so I think you made a really good point about biases. I think sometimes investors aren't frank enough with companies, and companies don't understand how investors think. So sometimes there's a little bit of a disconnect with how they communicate with each other. And so it's been fascinating going from being on the investing side where you're making decisions and you can be very critical if companies don't do things well, and obviously not doing things well might result in terrible share price performance. And then it's your boss getting mad at you because you told him to buy something that didn't work out. But it's easy to be critical when you've never been in the hot seat, and running particularly a junior company. It's a really, really tough job because you're competing against literally thousands of publicly listed companies for a very finite source of capital that's moving around the world. And how do you do that? And so for me, I think the most important ingredient, and everybody will argue obviously about how they look at things and how they invest, but for me it's people, because you can have a very underwhelming management team that makes a lot of mistakes that can destroy shareholder value in a good asset, and you can have a great management team extract a huge amount of value out of a mediocre asset. And so that people side of it, it's really important. For me, it's the one thing that I look at above and beyond everything else.
That's awesome, Nikki. Yeah, thanks for informing me as well as all my listeners that even though I'm not a geologist expert, that really 99% of my moves don't necessarily mean that it's around that. So I appreciate you for going into detail there and kind of explaining it. And I think you definitely did nail something, which was the people, right? If we think about not only the mining industry, but any sector, right? The top leaders, that's something that they do, not in terms of their product, but even how they communicate or all these aspects are the best leaders that you should want to follow, right? And I know people who follow this industry, like the raw speedies, right? Like the ones that are certain, that are comfortable, where people have a track record and they've done it again and again and again. So we will kind of dive into a little bit about that soon. I do want my listeners to get a better feel of kind of who you are. But before we go there, I wanted to ask you, I know a couple of weeks ago, you went to the BMO Global Metals and Mining Conference. So I wasn't there, and I know probably a lot of my listeners were not there. So what were some things that caught your attention that stood out?
Great question. So number one, the good times are coming back. So how you tell if you're in a positive trending market is the food at conferences gets better and the drinks get more expensive. So that was definitely where we're back in the better times. I think the big shift from my perspective, some things never change in our industry. It's a demographic that's a certain demographic, and I would say and I actually think it's a valid criticism of our industry, because there's a disconnect between how the industry leaders think and then how the general population thinks. And sometimes, particularly when you're running a large company, you're making a decent amount of money, you're somewhat separated from what the average person thinks. And I think that would, to me, would be a big negative. The big shifts that you've seen, I would say structurally nothing much changes in our industry. And that's a good thing and a bad thing, because we are doomed to make the same mistakes, the same choices every single cycle. And if you as an investor understand that, there's a huge amount of utility from your perspective and ability to make money, because companies do exactly the same thing. So they group think, they very rarely stand outside of the crowd. For me, the biggest takeaway, I'm not necessarily sure it's that helpful for industry actually, is this very large focus on ESG. And mining companies have always been good at ESG. They have to be, because you can't move your widget factory. So you have to be a good environmental citizen. You have to build relationships with your local communities, all of those good things. So in some ways, the mining industry was early adopters, but this is a very challenging business. And it's a business at the end of the day that people are buying and trading and holding companies and buying shares and making investments, because yes, that's part of the business, but they also want to ultimately see share price performance. And so I think sometimes our industry, and I love our industry, and we could be so much better, and we could be so much better at communicating the positive things that we do. But from a theme perspective, obviously everybody is on the whole, it's the greenification of the globe bandwagon, the decarbonisation super cycle. It's real, it's here to stay. I think with recent events with Russia, there's been this visceral realization of how reliant we are on commodities and still on the fossil fuel mix. And so as you look at the companies that attended that conference, I think that most companies, there's very few that stand out, in my opinion, as leaders, as forward thinkers in their sector. If you look at Robert Friedland, I think sort of 10 years ago, he was very prophetic in some of his, whether it's on YouTube, you look at some of his comments about where the world was going in terms of energy mix, etc. I probably see less of that today. And I think maybe part of that is a lot of people are really scared to have an opinion. We live in a cancel culture. And if you're stepping outside the bounds of what's acceptable, and what's acceptable changes on a daily basis, if not an hourly basis. So people tend to want to hide and not be observed or focused on. And I think that's not the right thing to do. It's the easy thing to do.
Well, you brought up a lot of good information there for us to definitely unpack. So I appreciate that. But something that I want to move to now is you have worked with a lot of great mining companies. You spoke a little bit about some of them before, the different roles that you played. But something that stood out to me is I know you worked with first Majestic Silver Corp. And, this is a very well-respected company in the space. So what was your experience like when you worked with world-class mining entrepreneur Keith Neumeyer?
So Keith he's really unusual in our sector, because he understands two very, very important things. He understands the power of retail, and he has spent decades building those relationships. So for example, I presented at a retail-focused conference in Germany last year, and most of the companies that were there were the micro caps, so the baby juniors. And the only company of size that was there, and not just of size, plus $3.5 billion US company, was First Majestic. And I knew obviously about Keith's relationship building abilities with a very important segment of our community. And I think sometimes, particularly as companies grow up and get bigger, at their peril, they ignore the power of the retail. And so I think that he really understands that you need to appeal to the broadest investor base as you possibly can, because ultimately the more demand for your shares, theoretically, the higher the price should be. And I also think that he understands the power of value. So when you have a strong valuation, you need to act. And you can act either by issuing equity, by issuing more shares, or you can act by acquiring something. So he's built that business taking a view of the importance of retail, and really, and not from a cynical perspective, from a very genuine perspective. Seeing him at that, I mean, I have never been at a conference where a CEO has shareholders coming up and asking for their autograph. Normally it's the opposite. So he has, I think, a pretty unique skill set in our sector with respect to that. And then also his long-term business strategy in terms of how to execute on value. And look, he's also a true believer. So I think the average person has a pretty good bullshit detector, and he's not cynical about silver. He is really probably the biggest positive voice for silver in our sector, and really believes everything that he says. And I think that authenticity comes across and is appreciated by retail investors, which I think are very big supporters of the company and of the company's value.
Absolutely. I think you brought a lot of great points. I definitely do think he's got a lot of passion, a lot of conviction. He's got skin in the game. And like you said, he really stands up consistently for the sector. Like even when certain, let's say, critiques say, oh, the mining industry, it's such a risky sector, or the mining industry, they do terrible things, to our earth and our land. And, Keith is continuing, I think, not only, as a successful CEO, to lead a company, he's also doing, I think, bigger, better things in terms of for the space as well as for even our environment. Because I know he's a big believer in sustainability, right? And I know he implements a lot of that into their company plans, right?
Yeah, and I would say though that every mining company, publicly listed mining company, does the same thing. And so I think one thing our sector does very well, it's less good at spreading the message, but what it does really well is so let's compare an Amazon, for instance, building a big Amazon factory distribution center. So the people that get paid there are on minimum wage. They're not, they're often on short-term contracts. The working conditions aren't very good. I just went recently because I've decided to start collating facts, because everybody says mining is bad. This is this universal response that mining is bad. So I said, well, let's actually have a rational discussion from a scientific perspective. So if you go to our worldandData.org, which is an amazing website, it is non-biased, anything you can find, it's free. You can basically download data. And so when you look at CO2 emissions by sector, for example, industrial buildings are responsible for 7% on the energy usage, a responsibility for the CO2 emissions, and non-ferrous mining, which is basically all mining except iron ore, is responsible for 0.7%. So that's the card hold facts. And so whereas mining, they always talk about the multiplier effect of mining. Jobs in mining, for example, are generally well paid. There's an offshoot when they're often in remote locations. So I've visited mines throughout Africa, for example. So it is the biggest economic contributor. It results, and they invest a huge amount in the community, and that's direct investment in terms of infrastructure, power, water, jobs training, higher than average salaries. And then no mining company, public mining company, can be a bad environmental citizen. The good old bad days of mining of 50 years ago, where you could metaphorically rape and pillage the environment, that doesn't happen anymore. It really doesn't. Mining companies, it's the most regulated, probably the most regulated industry in the world, and it's one that it has to give back because it has such a negative reputation. But the mining industry is less good at spreading the word, and I think that's partly because CEOs don't want attention. You'd rather hide than be on a Twitter frenzy feed or being attacked by the media. And it's an industry easy to attack because people don't understand where their stuff comes from. They don't understand that our quality of life, our iPhones, absolutely everything we use, it's a product of mining. And so I think Keith does that really well and messages it well, but I would say every company does it that's publicly listed. Private or government-run companies, and the legal miners, they're the ones that normally results in environmental degradation. But just while we're on the topic of illegal miners, it can be very easy again to sit and pass judgment when you go to Burkina Faso and there's very little ways to economically look after yourself, to feed your family, etc. So it's very easy when you have a lot of excess stuff, and by stuff, you have your capacity to feed your family, to educate them, to send your kids to school, all of those things that we in Western societies take for granted. And you go to Burkina Faso and we're negative about illegal mining, but if that's your only economic opportunity, you don't care about the environment. Only wealthy people have the luxury of caring about the environment. If you've got no other way to feed yourself, you don't care if you're putting mercury into the river systems, etc. And so sometimes I think we need to step back and be looking at it's very easy to sit and pass judgment, basically, particularly when you live in a Western rich world, first world society.
Absolutely. I think you brought up a lot of really great points there. And I definitely think there needs to be a pendulum shift, a mindset shift where people have to understand that even like the route that we're like where we're going right now, even with the green economy or all these things, we won't be able to go there without mining, or even, a couple points that you touched on, even all the jobs that it gives and good paying jobs. Like we're also going to need that as well too, so it is a sector that is very needed. And there's definitely, kind of like you said, a lot of misconceptions that need to be rebranded, so people are aware of all the incredible things that this space actually truly brings our world. And so something that I want to move towards is, Rick Rule, a leader in the space. A lot of people know him because he was, the president and CEO of Sprott Money Inc. He believes you are an upcoming personality in the natural resources industry. How do you think you earned respect from one of the top investors and speculators in this investment space?
I don't know, but I'll have to, that $5 I've paid Rick has gone, is resulting in big dividends if he's saying nice things about me. Look, I first met Rick actually when I was a baby geo, when I first came to Canada, and I was working for a group that he was interested in doing some investments in. And so he just called the office and I answered. And so I suppose that was my first exposure to Rick Rule, and I didn't know who he was. I didn't know the money side. I didn't know that he was famous, and that when Rick spoke, everybody listened. And so I suppose I built a relationship with Rick over the last, we've been in Canada 20 years from really that first conversation. And Rick he's a great mentor of younger people in the industry, and I'm not young anymore. And I've tried to help to give it back in some ways, in the way that Rick does. And Rick enjoys, he's one of those great devourers of information and likes meeting people. And then he spent a few years trying to hire me on and off, and I continuously said no, and he didn't take that personally. And then I got to know him and his wife, and I suppose see his influence. And he's a huge advocate for the industry. And we need more people like that. And I think now that he has resigned from an employee role at Sprott, obviously still, I think, the largest shareholder of Sprott, but he's got this real opportunity to be a public voice in a way. Obviously, when you're a senior leader in a public organization, then it's a little bit more difficult to be able to be probably as blunt. And so I think it's going to be fascinating to see what he does. So no, with Rick, I suppose I have a reputation for good and bad, for being ethical. I say what I think gets me into hot water. And I think that Rick appreciates that. But I do have to tell it's a story I find absolutely hilarious. I was at the PDAC one year, and Rick had just given a presentation, and he exited, and he was surrounded by his adoring followers that were all trying to ask him questions. And I was walking past, and he goes, "Hello, Nikki." And it was hilarious because everybody just turned and looked at me and then realized I wasn't important at all. So immediately went back to Rick. So no, he's great. Every time I get the opportunity, obviously, it's always good to have it's never an uninteresting conversation with Rick Rule, to say the least.
I could definitely agree, at least on like the listening side. He's definitely an incredible person in the space, but also he has so much wisdom and knowledge, and he loves to share it, right? He loves to talk about it. He's so passionate, right? Something that I want to move towards now, we got a better background of all of your experience, but you and I both know that investing in the junior mining stocks involves, a huge amount of risk and also a lot of high volatility, right? That whole roller coaster feel, especially if, you don't do your due diligence. But when you invest in the best ones, you could reap massive profits. So something that I want to hear from you is, investors often talk about their winners, but they rarely talk about their losers. So can you speak about a time when you hit a home run and a time when you struck out?
Sure. And I would say to your audience, if anybody acts like they've never lost any money, they're lying. And I think we do ourselves a disservice because people only do talk about their winners. Sometimes I think there's a misalignment, this perception that this is easy, that it's easy to make money, because it's human nature. Obviously, we talk about our successes. And I gave a presentation recently at a conference, the one in Frankfurt, and it was about how to sell. Because I think we're all very good at making the buy decision, And even professional money managers are very, very bad at pulling that trigger on their sell decisions. So I think that what I've learned over the last 20 years is the main goal is to make less mistakes. If you can make more positive decisions than negative decisions, you'll make money over the longer term. So it's not just about focusing on your winners, it's making less mistakes and trying to be aware objectively of how you invest. Everybody invests differently. To be aware of your own natural biases, and that can be quite difficult to do. We all have them, but just a step back. So my worst loser, I lost 100%. Company went bankrupt and I held it the whole way down. So my advice is, if it looks like it's going bankrupt, and I'll talk about some warning signs, sell and sell very quickly, because you need to have the imagination when you're down 90%, you need to have the imagination that you could be down another 90%. And when we're down 10%, we're going, no, I just hold it till I get back. And that's irrational. So when you're looking at a position that is down, you have two decisions to make. Three decisions actually. Sell it because it's a lost cause, and being down 10% is better than being down 50%, or buy more because you think that there's something else that has made that share price go down. So it might be external market factors, it might be what we're seeing now, where you're seeing a lot of global insecurity, but your fundamental thesis on the commodity and the company remains intact. So buy more, or two, holds. And you constantly need to be doing the work, is probably what I'm going to say there. So my worst was a bankruptcy, and I lost all the money on it. It was actually due to inattention. So I was working as an investment banker. I was really busy. I had this position. I wasn't looking at my portfolio very much. There was absolutely no excuse. So a rookie mistake, and I had by that stage been in the industry for well over a decade. And so just pay attention. That's the best thing you can do. My biggest winner percentage-wise, my biggest winners as a group was actually making a commodity sector call. So I was working for a precious metals fund in 2015. Those of you that were investing, this was when everybody thought the world was going to end, gold was dead, everything was down. We've been in bear market for 5 years. And I resigned from that fund, and for the first time had the opportunity to invest. And I invested in a whole bunch of gold companies that had particular qualities. And my thesis was, I didn't predict 2016. Nobody did. People will always say, no, I guessed it in hindsight. But nobody did. I mean, I remember how bad it was, but I thought over the next, sentiment was so appallingly bad. And when sentiment is so negative that it's the end of the world, it's never going to recover, is when you need to be buying. And it's the hardest thing to do. And so I thought, well, I think gold's going to come back. It's going to come back sometime over the next 2 years. I need to be positioned for that. And so I invested it in 5 companies that in our sector we'd call leverage beta. So it was Vista Gold, it was Bear Creek Silver, it was these companies, and what they had in common was big ounces in the ground and a balance sheet that would allow them to survive at least the next 2 to 3 years. So all I was looking was cash and big ounces, because those companies are the ones that particularly retail investors are drawn to when you see an uptick in price. And so I invested in all of those during the depth of the bear market in December 2015, and then 2016 happened. And so the average stock was up plus 300%. And the one thing I have learned over the last 20 years is you have to sell. And the share prices moved so hard, so fast, that the charts were essentially vertical, that I had exited all of them by mid-2016, which ended up being a very good decision, because obviously we started trading sideways for a few years. So I think my best performances have actually been making a sector call, and being okay with timing being plus 1 year to 2 years. So how I invest now, I'm invested in something that's private that most people won't get the opportunity to be invested in. And I'm invested in that company. I'm a director, but I think that one has all the right ingredients to do very, very well as if and when it goes public. I'm a big believer in gold, and I wouldn't say I'm a gold bull per se, but I think as we look around the world and what's going on, gold is your insurance. And we live in a world of fiat currency. We live in a world of where you're seeing the weaponization of the US dollar. We're seeing all of these elements that I think everybody probably needs to be a little bit concerned. And so being invested in gold, I'll always be invested in gold. You know, I spent most of my career in gold. So but also copper. I mean, the decarbonisation cycle, it's here to stay. There's been an underinvestment in the R&D of our business, in exploring because it's high risk and it's high cost. And so exploration has been undercapitalized for decades. And so we're seeing very few large major discoveries with the NIMBYism that goes on with the permitting timelines. The average time from discovery to production is plus 15 years. All of those things, it's really good for commodity prices. So, and we need raw materials to build out on the decarbonisation side. And so I suppose I'm focused on particular sector groups that I think no matter what happens in the short term will do very well over the long term. So good management teams, good projects.
Awesome, Nikki. So, you did a good job there at explaining a little bit of macro. Also, the most important thing here is the buy and the sell side, right? Which has to do with that winner or that loser. But something that I want to talk about with you, and I think this will benefit my listeners right now, is I know you've said often to make a smarter buy decision, an investor must increase their probability of success. I know you talked about some of the things that you've already give us a little teaser of, the people, the project, the strategy, the promotion, cost of capital. So if you could just expand on this, because how can a retail investor succeed when they are investing in junior mining stocks?
The hardest thing about being a retail investor is that you've got so much to choose from. And so how do you pick the chaff from the wheat? And then you have this big industry that circles the mining industry. That's the promotional side of it. And at the end of the day, those people aren't your friends. If they're being paid to talk positively about something, then you would say there's a bias there. And the thing is a lot of those groups, they're going to be in cheaper than you. They're going to have warrants. They're going to have options. They're going to have all of these other elements that you as a retail investor, it's much, much more challenging. And so in our business, sometimes it's a little unfair that the rich get richer and the people who are connected and who are very exposed, you'll always make money if you get 1 cent shares or a tenth of a cent shares, for example. So one thing is to try and find some of those voices that you trust that bring a degree of objectivity, so that understand what their motivations are. If they're just getting paid to talk about something, you probably have to take that with a grain of salt. So there's that. And I think that those groups that understand how to communicate, and this is the challenge, and I think those groups that do this the best earliest on will see that reward in their share price, is I think that companies should be starting to focus on communicating the right way to this incredible audience out there, which is this global retail and audience. And you and I were talking before the recording started about the Reddit effect. So that is shown. I mean, that has moved massive companies. And these are people who aren't multi-billion-dollar, trillion-dollar funds. These are individuals that are acting in mass because they embrace a certain thesis. So it's kind of trying to be aware of what's going on out there. And so people such as yourself that are talking to people or talking about companies, it's people that are talking about the sector that are providing an objective voice. It's all of those things, but it's not easy. That's for sure.
Absolutely. No, for sure. And so another question I have is, I know you've spoken about this before, but every day there's always a stock to buy, and every stock has a day to buy. So could you explain the positive share price catalyst that an investor needs to be aware of?
Sure. Well, the most important one is cycle. And so I adapted this from an Australian investing group. They call it the mining clock. And it's a great way, if you want to instill discipline, is to go just search line selection mining clock. I think some of my presentations are online as well. And what it is, we talked about the start about the cyclical nature and the predictable behavior of our business. And so if you look at that, you'll see certain themes, and you should be able to, and everybody will have a different view of exactly where we are in the cycle, but that needs to be your key mechanism for then deciding. So are we in the positive elements that the whole commodity is going to move in the right direction? Because if gold is going down for the next 5 years, it'll be really, really difficult to make money. So number one, it's the cycle. Then number two, it's kind of understanding where we are in the cycle. So my personal thesis is we're not at the beginning. Let's talk about gold. We're not at the beginning of a bull market anymore. The really easy money has been made But we're nowhere near the end of a bull market. So we're not seeing this classic behavior that you see as a bull market starts to wane, which is crazy M&A, which is crazy valuations, all these things that we saw last cycle that then resulted in this calamitous decline. And so there's a lot of opportunity to make money out there. We're seeing explorers get very, very well rewarded for drill bit success. And look, the most easiest thing to have to promote yourself is success on the drill bit. I mean, we've seen companies that are up, plus 2,000% in a year. And this is what always attracts us to this sector, is you have these explosive returns that you literally don't see in any other sector. So there's that part of it. It's the people side of it as well. I mean, we live in this world of this incredible access to information, and the great thing, so websites, go look at the websites. Does their plan make sense? Do they seem to know what they're talking about? Look at the people. Do they have people that understand the business? So the technical side of the business, the capital markets, or are they a bunch of mates? Call up someone you know and trust and say, well, I'm looking at this company, should I bother looking at it, or should I go and do something else? So all of those times, and then there's different. So if it's an exploration company that's drilling, the reality of becoming a mine is very far removed. So you're less concerned about permitting and jurisdictional risk. Whereas if it's a development company, you need to start really understanding how that country works. So everybody says North America is the safest jurisdictions. It really isn't. We've just seen the US with Trilogy Metals that have reversed a record of decision. I mean, if that happened in anywhere else in the world, in Peru or Brazil, everybody would up in arms saying what a terrible country that is. You should not invest in there. And so no country is safe. Every country has different manifestations of risk. So you need to understand what are these big exogenous risks that could negatively impact your investment decision. And when you make a decision to invest in something, understand why you're making that decision. So maybe they're drilling and you think they're going to have good drill results. If they don't get good drill results, or they don't seem to be adapting their business model, maybe you shouldn't own that. Or if they do get good results and it performs, then you need to be taking money off the table. And this is a big adage of Rick rules. If you're up 100%, sell 50%. It's the greed. Don't let greed be the key driver in all your decisions. It's really irrational. And then and it's the same on the sell side. And so remember that a successful investment requires two actions. It requires a buy decision and a sell decision. And the sell decision at the end of the day, that's the most important decision. We forget about that. But to realize an investment, you have to sell. And so you have to work. If you're going to manage your own money, you need to do the work. You need to understand who the players are, who the good guys are, who the bad guys are, who the ones that seem to understand at the end of their day, their job is to deliver value for all shareholders, not just for them and their mates.
I think you pinpointed a lot of really good success criteria to be a good investor or a better investor. And I think the biggest, strong common theme that you spoke about is, again, like the decision to buy, and also like the decision to sell, because you could be in a company that is great and they do extremely well. And then all of a sudden, maybe there's, I don't know, a pullback in, the gold and silver price. They're still a really good company. Nothing has changed. But now they have a huge pullback, waiting for that next kind of move,
That's
right. And so a lot of investors kind of see that, it's a company that they believe in, a company that they like, like they like the management team. They like the company has like the goods. They have a good business model plan. But there are also times where we shouldn't get too greedy. We should be happy with those really strong short-term profits and take a little bit of them off the table.
Yeah, there was an interesting psychological study done that shows that people tend to be more angry when their investment advisor sells a winning position too early rather than selling a losing position, because you're always focused on what could have been. And how I think about it, if I make a decision to sell, I sell, and I don't really look at it again. Unless some things I'll trade, other things I'll own for multi-years, but there's very few mining companies or any companies that you can kind of just sit there and hold and forget about. And those very few ones have a commonality to them. It's normally a very good management team. And what all you want, and this is the one thing I think lots of management teams don't get, is you need to build trust with your investing community, whether it's an institutional investor or a retail investor. And again, this is what Keith does very well, is with the retail investors, is that if they trust you, they'll be willing to ride the ups and downs. and it kind of results in a bit less volatility in your share price. And so if you can be that person that is, and it's really easy to do, which always astonishes me why so few management teams can do it, do what you say you're going to do. That's it. It's not rocket science. Like, be very clear about your strategy and then deliver on it. Don't just chop and change. Don't wake up and negatively surprise someone. Don't go and do a stupid deal that destroys shareholder value. The one thing I would alert your investors to, we touched on bankruptcy, and we've seen a few recent examples that can remain unnamed in our sector, but with operating companies, particularly single asset operating companies, or one big asset, the things you want to watch out, are they doing kind of serially dilutive financings? Do they have debt on the balance sheet? Are their operations being challenged? Those are the ones, when you see them doing forward sales, putting essentially an infinite or doing a royalty or a stream on their primary commodity, all of those things reek of desperation. And so holding shares in a company that has a very stretched balance sheet, that are serially issuing equity just to fund the business, particularly if you're an operating company, you need to be very, very careful of those. Don't hold them and hope they're going to get better, because they mostly don't.
Those are definitely some really good rules. And it brings me to think, how can a retail investor spot a world-class mining entrepreneur like Keith Neumeyer?
That's really difficult. I think people say past, it happens in an investment. Whenever you have certain investment advisor, they say past performance is not a predictor of future success. I think serially, what happens in our industry, in Ross Beattie's case in point, is you have success and then your name becomes associated with success. And so whatever you touch that your name gets associated with, there results in positive share price performance, and it becomes a self-fulfilling prophecy. Over the short term. Over the long term, reality will ultimately rear its head. So I do think that there's always going to be room for the next emerging new entrepreneur. You just, again, I think when a company has success, you'll know about it pretty quickly. And so those individuals, and they go and then they can then take the really serially successful, understand, for example, and we saw this with Wheaton River. I mean, Wheaton River started taking a view on gold, and that view back in the early 2000s was that gold was going to get higher. So they were willing to overpay or build a base on less good assets because the gold price would save them. So that business model worked incredibly well for a very long time. And so it just depends where you are in the cycle, is what that leader or that person saying makes sense. Does it viscerally make sense? And obviously branding, that means something in our sector. Ross Beattie's name attached to something, rightly or wrongly, will engender interest. So, but I would caution that just because a name is, Eric Sprott obviously is invested in a huge number of things, not all of them have done well. So just because someone who is known in our sector, his name is attached to it, doesn't mean it's going to be a guarantee of success. So to kind of keep that in mind as well. And obviously when they're invested, the name comes up, you have that initial share price pop. So to buy it after it pops, for example, and you just, there's no solution other than doing the work.
Absolutely. And I definitely think you have to be selective, because there are so many companies. And one particular person that I admire in this space, who I think is extremely disciplined and very selective, would be an investor named Michael Gentile. I find he is very strategic, would be the word. So yeah, I definitely think it's important to make sure that you do a lot of due diligence before making any move in the sector. And one company that I feel was a great example, showcasing that they're able to communicate well, or that they actually put their money into their ground, was actually Great Bear Resources, Chris Taylor and his whole team. I think they were a great example of a story that started as an explorer, did everything that they were saying, communicated well their plans. And because of that, everything paid off. They gave their shareholders an incredible amount of value, and they got bought out by Kinross.
Yeah, so that's this perfect story that really happens. Everybody needs to know that this evolution from this great discovery, probably the best discovery in this cycle in Canada, And they played it perfectly. They kept their share structure tight. And as you said, they did what they said they were going to do and had a lot of skin in the game. I also think they sold at the perfect time. Your valuation will never be as high as it is when nobody knows what you really have. It's human nature when you, for instance, when you don't have a resource estimate, to assume there's infinite value. And the minute that you produce a resource estimate, everyone says, well, it could never get any bigger. So I was a Kinross shareholder. So that deal, from my perspective, unbelievably good for Great Bear shareholders, less good for a Kinross shareholder. And obviously with everything that's going on with Russia, that's further negatively impacted their share price performance. So those companies are really rare, but they're the ones that you can kind of, if you see a pattern of a management team just simply doing what they say they're going to do, that de-risks it for you from an investment perspective. And I think Chris has given a number of talks, and that was on kind of how they strategize. And I think he understands the secret sauce, and it's not a secret. This is very, very, very basic stuff. That's why I don't understand why our sector, it's that trust. And his investors, although I did hear, I met with a couple of the people involved in Great Bear towards the end of last year, and they said they were getting nasty phone calls from shareholders saying you sold too early. They absolutely didn't. They sold at the perfect time when they didn't. Selling before you put out a resource estimate is absolutely the perfect time, because generally what happens, resource estimates generally disappoint the market. I mean, be aware of that. I can think of one example that didn't, which was Chalice with its fantastic discovery, PGM plus nickel plus copper discovery in Australia. Now, they were a plus $2 billion company just on drill results, and they put out a resource estimate. And that's one of the few examples I can think of where the share price went up on the day. Mostly share prices go down after resource estimates. So it's kind of it's a de-risking event. Anything that involves truth in it, or reality, it tends to disappoint. Reality disappoints everybody. It's one of life's great lessons.
I think sometimes people are overhyped or their expectations are high.
That's
and
right.
If their expectations are high, then obviously it's easy to get disappointed.
Yes, it's a happiness equation. When reality exceeds expectations, you're happy. But mostly that doesn't happen because of exactly what you said.
So that's definitely a good nugget. I'll make sure to write that down and keep that in mind, Nikki, another question I had was, you've worked with many high profile investors. So what do you believe separates a good investor from a great investor?
Selling, being able to sell. Very, very few. And when you look at it, or when you look at the GDXJ, and I'd advise people to do that, bring up Yahoo Finance, plot GDX and GDXJ from the peak in 2011 down to the bear market in 2015. And any gold fund that is public, they generally underperformed the GDX and the GDXJ. And these are people who are famous in our sector. So being able to, the great investors do well in the bad times. All of us can do well in the good times. And the great investors will be honest about how difficult that is, because it's really, really hard. It's really hard to go against the crowd in almost anything in life. But when you're investing, when everybody hates something, Buffett said it best, you can do that. When everybody loves it, when you're feeling really happy, when you're waking up and going, I'm a genius, I'm up 300%, there's nobody smarter than me, you need to be selling. It's normally when you're the happiest is when you need to be taking money off the table, and when you're the most upset is when you need to be thinking about making a buy decision. So the great investors sell the earliest, and they sell the most aggressively in the bad times, before the bad times hit.
Everyone heard that. Selling is a key aspect of a great investor. And that's a common theme that we've spoken about on this episode. Another question I have, Nikki, is if someone is new right now listening and they're hearing about this space, and we've had a lot of things that we spoke about, where do you suggest that a millennial investor goes to better educate themselves before making any investment decision in this space?
The basic resources would be things like Kitco. I mean, it's a very broad medium. Most news, obviously, I'm sure people can pay to have their news more prominent, but they do really good general interviews. And I think from that, you'll start to see voices that you like, that resonate with you, that you might want to follow. There's CEO.ca, all of those, but yeah, I think you're kind of immersing yourself in the Twitter world, which can be, and there's certain newsletters in our sector that, or influencers, if we may call them that that their voices, I'm not sure that helpful. They're very negative. They pick on people. They get very, very personal. I don't think that's helpful. I think being emotive and insulting and being negative about the entire sector, it's not necessarily a voice that I would follow. So I think it's finding what works for you on an individual level. And I mean, I've thought about this quite a bit actually, is there's someone who's very good, very, very good analyst, Mike Gray. He's with Agentis. My advice to him when he left Macquarie was to make his research public, because at the end of the day, if you're a voice in the sector, it's about having influence. It's about having people listen to you and acting on what you say. And so there's some voices out there that do very fundamental research. Joe Mazumdar's, I suppose, another one. Yeah, you'll pay for a newsletter writer like Exploration Insights. So there's a cost element. I mean, I personally have been thinking it would be great to start something where you just, you have to be obviously very cautious. You can't make investment recommendations if you're not an investment advisor, but you're just opining on things that you're doing and looking at that is really accessible and available to everybody. So there's not someone really in our sector that does that I've seen. Most people are either getting paid by their subscribers or they're getting paid by the companies. And those that are getting paid by the companies obviously aren't going to be negative about the company. So there's, again, it's kind of be aware of what's influencing those information sources that you're reading and trying to find a voice that you trust that can help sift through this huge amount of noise out there.
Well, thanks for sharing those organizations as well as those names. Kiko News, they're actually from Montreal and New York. So, go Montreal, go. But no, yeah, excellent platform, great interviews by, David Land. And also I do think that there are some other great leaders that are trying to help support and kind of fill this need. And I think Jay Martin is doing a good job.
Jay's doing a great job because he's very broad in his viewpoint, and that's a little bit unusual. But I also think he brings a really interesting perspective because he's not just enmeshed in the mining sector. And so sometimes that those that are, that know it the best, love it the least. And so I think he is providing an excellent overview. Crux investors do a good job. Companies do pay to go onto Crux Investors, so do be aware of that. But I think that he does a good job of interviews. I think that the great thing, that's a wrong phrase to use, a positive outcome of COVID was that people realized there was so much more online communication, and that online communication is being captured in perpetuity on YouTube channels, all of these retail focused conferences that you as an investor can now go and look. And so you have a chance to meet that person virtually by looking at their presentations, and you can see how they come across. And so I think sometimes that's really important, because if you watch a CEO present and you go, oh, he didn't do a very good job. If you felt that, probably a lot of investors feel that. And so that means that company might have a bigger hurdle in terms of getting the message out in a palatable way. So there's a lot of, another person who does a great job is Kai Hoffman with Saw Financial. So obviously I spoke at his two conferences, his virtual and in-person one, but he does a great job of bringing speakers of different ilks together. And so if you want to go and just do a search on the Deutsche Goldmesh conferences, there were some fantastic public speakers. I listened to one, Ronnie, who talks about inflation. After it made me go, I wanted to go and buy physical gold that minute. And we're seeing some of this thesis play out at the moment with the inflation. I mean, this incredible inflation, fiat currencies, all of that argument that he was looking at things like that are hard assets. So there's definitely a bunch of, there's almost an infinite number of people that you can look at and that you can follow. But it's just, it's how do you associate and attract yourself to a particular, like Geraldo and Nicole with what they're doing. I think they're doing a great job. It's selective, it's focused. So there's a lot of opportunities to try and see and get exposed to different voices that won't actually cost you anything.
Absolutely. I think you did a good job there at giving an idea that there's a lot, but also saying, also be cautious of, which leaders you're following, biases, all these things that could influence our investing decisions, right? So I appreciate that. So Nikki, something that I ask everyone who comes on to my show, the purpose of this podcast is to inspire millions of people to achieve greatness and enhance their overall personal well-being. So what is your definition of greatness?
Oh God, that's a really hard question. Being able to sleep at night, not doing anything bad, just try and do things that don't negatively impact other people. There's these ephemeral things like wealth and influence and power and money, but for me, I'm driven, I suppose, by a slightly different set of values. So yeah, and as long as my mum thinks I'm great, that's all that really matters, and she's really biased.
I definitely appreciate that answer, because I've said many times, like to friends or even, people that have reached out to me about the show, greatness could come off sometimes, as cheesy, or it could come off as, being successful and all these things. And I do think it plays somewhat of a role, but I think for me, even greatness could be like a great father, or, a great daughter, a great mother, or it's not just in our overall health and wellness. So I think even just like that simple moment to moment greatness could even be an example of that.
Yeah, I think we live in this world of social media, and everyone's comparing everybody to everybody else, and you go down that road, it doesn't have a good ending. So I've seen people who've obviously made a lot of money in our sector that are awful people. I've seen amazing people that maybe haven't had a lot of material success, but they're people. I don't know, maybe the definition of greatness is being that person that people would choose to spend time with, not because they have to. I feel like that's an achievement. So
100%. So Nikki, who is a future guest that you would like to see on the show?
I'd like to see, I could reference someone who I think is fantastic, that I'm involved with their company. He's Luis Azevedo. If you want to kind of get a different perspective, Brazilian, a huge advocate for the Brazilian mining industry, geologist originally before he turned to the real dark side to become a lawyer specializing in mining. And so I've got to know him over the years. He is someone who, and I have a huge soft spot for Brazil. He is someone who has been a very, very positive voice and a very active voice for the mining industry, and helping advise government on implementing strategic mineral policies, etc. So I think it'd be great to see voices of different countries, actually. And Brazil's a mining powerhouse and an agricultural powerhouse, and just seeing those different perspectives, because I think that we as Anglophone, particularly kind of Anglophone speakers and from the West that go into these other countries that maybe don't understand as well as we could the local cultural implication, the regulatory environment, all of those elements. I think hearing voices of particularly some of the large mining countries in the world about how they view the world would be really interesting.
Awesome. Yeah, no, I would love to have him on the show. So if you could connect those dots,
will do.
That would be great, because it would give us, again, like you said, another perspective, right? We hear a lot of the same names or kind of voices. And, I'm constantly trying to see in kind of every area of who I'm bringing on like the show, I'm trying to get different perspectives, and introduce that, from the greats that are out there. So I appreciate that.
No. And I think what you're doing is a great thing, is that ultimately providing a platform for those voices that are less well known. They always bring, it's an interesting perspective. It's new voices, because the people who are very well known, they'll often say the same things. And so having someone that comes in with just a bit of a different viewpoint or a different way of looking things, I personally find the differences, that's the most interesting thing about and I suppose our world. And also I was in a fortunate position of getting paid to go travel, look at projects and meet new people and new countries as part of my job. And that was an incredible privilege. And so it's something that I hope to continue doing until the day I die, which hopefully won't be for a while.
Awesome. So Nikki, where could our listeners go to connect with you online?
Oh, I'm only on I have no social media presence. I've been thinking about changing that, probably, I don't know, doing something on Substack or the like. But Cupel, if you want to email me, I don't mind. You can email my email address. It's what I look at the most commonly, Adshead-Bell at cupeladvisory.com. Or I'm on LinkedIn. That's it. I'm a neophyte when it comes to social media.
No, I actually like it because it keeps you low key, keeps you humble, and there's someone else who has a similar kind of style to that, and that's Michael Gentile, who I spoke about earlier on the show. He's got his LinkedIn, and then he's also on like the CEO platform, and then email. So literally 3 ways to get a hold of him. And so even with you, there's 2 ways. So it's okay to be humble. It's okay to be low key. It makes us more hungry to want to try and connect with you guys.
Well, that's good. That's good. Yes. No, I don't know. I just think no one's going to want to hear my inane ramblings on Twitter. So it's not a medium, I suppose, that we live in a world of grays and things like Twitter. It's very black and white, and it's just about kind of trying to get a reaction, and that's not necessarily helpful.
Absolutely. So Nikki, I want to take the moment here to really, thank you for being on today. I know you're in Costa Rica right now and you're making this happen, so I know myself, as well as probably my listeners, like we're all grateful for your time. And I just want to take this last moment, to thank you for being here today. And I also look forward to our next time talking, or even meeting at a conference one day soon.
No, well, thank you very much. I really appreciate you taking the time and reaching out. It was fascinating, and I hope you and your listeners got something out of it.
Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review. This podcast is for informational purposes only and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos.